Hey there, Jedi traders. David here of TradingFibs.com to bring you state of the indices for the week concluding September 21st as we roll into the last week of September. As always, please seek financial advisement when trading with your money, as these videos are for educational purposes only. Support your knowledge in the market, see what's going through my head on any given day. Always make sure you have a solid trading plan and always manage your stop when placing a trade. Let's jump right into market profile. Excuse me. Take a look at volume profile as well. Take a look at some long-term charts and get a good example of how you play this intraday, knowing that the strategy works on all time frames, short-term, long-term. But where are we at? Well, we just had our FOMC minutes come out about 2 weeks ago. We got, or a week and a half ago, we had GDP data with numerous Fed speakers on last week. And this week, again, it seems when Fed speakers are at the mantle, it seems like the market moves more than any econ data they can splash up on the screen. So, still no lock-in on some interest hike. Again, thoughts that might end up before the end of the year. Market perhaps pricing in. But as I've said all this time, whether it's market profile, volume profile, we have targets below. We have unfinished business below. As you can see here on the Russell, we've just been migrating and migrating down. Our last open daily gap down here at 1096.3. That's right, 1096.3 as we continue to move our way down from a weekly opening price up here at 1165.5 on the Russell. The TF representing the R2K Russell 2000 opening weekly price 1165.3. You can see all the turquoise lines here 1172.3, 1162.4, 1146.4. That's right, 3 former daily gaps as we have migrated downwards. Market taking care of unfinished business below, and that is where we've been drawn to. Now, whether we get those next week, we get them in 2 weeks, a month, 6 months, I can't tell you that. All I can tell you is that the market takes care of unfinished business below. And if we have unfinished business below, that means, that's right, we have unfinished business above, which means, hey, at some point the market rallies back up. What would I like? Obviously, my bias would be let's finish the unfinished business below, take care of stuff down here, and then migrate higher. So that was our weekly big picture. You can see here it was pretty much a downtrend overall. Closing the week out here down here at 1115 on the Russell. Again, former daily gaps have been closed. Some remain now open. 1159.9 still open above, but closing out one former daily gap after another. At first we thought, Friday would have been an up day after a couple days sell-off, but as price action was just trying to get up higher, wasn't able to, and it was just a sell-off Friday right down to that 1115. Daily gap that remains there on the Russell. So again, 1096.3 is a lower target there on the Russell. Taking a look at the YM, very similar picture. Thursday, even more of a sell-off in comparison to the Russell, and Friday finishing actually to the upside, closer to the weekly opening price, 16,386. Again, open gap 456 from Monday's open still remains up there. Tuesday and Wednesday both sideways. And here we have 16,203, I'm sorry, is our weekly Friday daily gap where we closed it out. But again, we took care of another daily down gap, the turquoise here, 16,325. Do we still have room to the downside? Absolutely. Here we go, 15,726 is the lowest number I have on my chart. Again, this is market profile, not volume profile. Time-wise. Market profile here on the NQ, weekly opening price at 35.25, leaving an open gap 41.25. We still have an open gap up there at 366 or 66.25. So again, still room to go upside, but the question is how much more room to the downside? Again, Monday, Tuesday down, Wednesday pretty even, low volume day, Thursday downside, and Friday wild day as we just went and took out one line after another. One daily gap, 42.47 weekly gap, 42.64.75 taken out, 66.50 taken out. Former gap from a while back, 28.25 left with 42.13 to wrap up the week. That's right, we even took care of 41.94. Go back to some of my previous charts, you'll see price action just continuing to migrate lower. Is there more room on the downside for the NASDAQ? Yeah, there we go. 31.25 down here, and 97.50, 39.97.50. Market always takes care of unfinished business below. When do we get that? I can't tell you. I can just tell you that we'll eventually get closed. And to wrap it up on the ES, here we go. Market profile 63.50. Weekly open gap up here with the weekly opening price at 56.50. Migrating downside, and price action again, similar action on Tuesday and Wednesday. Thursday coming down here like the YM. Open gaps down below, taking care of unfinished business below. 21.25, that's right, 19.21.25 from a while back. Weekly open gaps all taken care of 31.29.25 and finishing out the week at 19.19. So we pretty much took care of the open gaps weekly, leaving an open gap up above. Do we have room to the downside on market profile? Absolutely. Down here at 1873.75 is my lowest target on the market profile. Now, let's jump up to volume profile, which is more in strategy, something we've been using in the trading room recently as a guide of where are open lines as well as daily gaps. Again, why is this more in line with my strategy? Why am I liking this a little bit better? Because like Heikin-Ashi bars representing price and not time, is that volume profile represents how many trades took place at a certain price. And so the strategy just lines up a little bit more in line with my strategy. Again, whether you use market profile or volume profile, I think the big picture I'm trying to get to you guys over here is that any downside level that is not closed out will eventually get closed out. How we use that all lines up with the big picture, all lines up with the intraday picture, as I will show you here in a little bit. All right, so here's our weekly. We've been seeing the last couple weeks. Here's our month of September. A lot of, after that big drop down, FOMC minutes finally coming out, we could see pretty much the trend has been downside. And as you get in a little bit closer, you can see the price action each day takes care of business. If it's got an open, as you can see here, it's got an open, open point of control back, even if it was 2 weeks ago, eventually closes it out, Do we have more lines down below? Absolutely. Here's the Russell. Again, 1029.30, an open point of control is our lowest line. So yeah, does the Russell have room to come down? Absolutely. Will it? Yes, it will. When? I can't tell you, but mark that on your chart, 1029.30, a line that the Russell needs to contend with and go close out eventually. All right, YM, similar picture here. Again, we saw it on the market profile. Again, each day closing out. As long as you don't see the pink line here extended, it means it took care of business. So taking care of point of control here at 359. We closed out 188. Here you can see, again, the big picture over that big sell-off. But as we go ahead and focus in a little bit closer to the weekly picture, you can see price action just taking care of downside business here around 16,080 and down here at 965. Again, do we have lines down below just like we do on market profile? Absolutely. So lowest line here, 14,825. 14,825. So when somebody's writing those headlines, Dow 14,000, you might just believe it a little bit. Whether or not we get that right now, I can't tell you. Volume profile here in the NQ, very similar picture, taking care of downside business. How far do we have to go down? Let's get that lowest number there. 42.75, 42.75. Not that far off when you go to the NQ daily gap here of 39.97.50, 39.97.50. Again, even a little bit lower to go there on open points of control. The market will eventually take care of that unfinished business. What's even more interesting, Jedi traders, here is what we have, the 600-day profile. The 600-day profile, what do you notice here, is sitting right here at 42.71.25. 42.71.25. Even though price action for the day finishing down below, price action at the higher end of value here around the mean of the 600-day, and eventually didn't hold up and came down and closed out even 4 more points of control, including the previous day here down here at about 42.03. Hope you can appreciate the volume profile versus the market profile, and just the fact that not only does it take care of unfinished business below, but it also represents, that's right, represents how many trades took place at a certain price versus how many trades took place at a certain time. Here we go, price action for the week, leaving an open point of control, but each day, Tuesday, Wednesday taking out that point of control, Thursday's price action taking out Wednesday's point of control, and then Friday coming up and taking care of what? Go back 1, 2, 3, 4, 5, 6, 7, 8. That's right, 9 days, almost a week and a half of almost 2 weeks of price action, taking out that point of control, almost the high of the day, and then regressing back downwards to value area low and down here to the 1919. So how do we line this all up with the long-term picture? Let's go ahead and go back to a volume profile on the TF. Here we have market profile and volume profile, and here we have actually we'll do this with the NQ, as I've already got that set up for you guys. So we'll set this up with the NQ. Let's first just go to the long-term picture. Take a look at long-term picture on the Russell here. Has been all to the downside. Here we go, T3 moving averages on a 100-tick range chart, downside, downside. 4-hour chart on a T3 moving average, just starting to migrate downside. They haven't crossed over yet. Once they cross, it will be in the red. Taking a look at the bigger picture on a 4-hour, this is a 50-144 exponential moving average, where you can see price action here midweek bounced on that, actually not midweek, towards the end of the week. Excuse me, as we had that sell-off on Friday. Right here, bounces off the 50-period moving average. Same thing on a daily chart. Weekly chart has been migrating back down to a former fib extension level, and monthly now also in a confirmed downtrend. And here we have a daily chart on a fib setup with no overnight trading hours, and again migrating downwards below the 200, below the 50, and below the 8-period moving average. So when you look at a chart like this, you ask yourself, what is the big picture? The big picture is, that's right, downside, downside. 100-tick is downside. 4-hour migrating, 4-hour on a 51.44, 51.44 downside on a daily. Monthly is downside, weekly is downside. So everything still continues to confirm downside. Now, what would I look for in an intraday if we are starting to come back up? Well, I'm going to be looking at these upper two charts up here. I'm going to be looking at the 100-tick range chart to be in the green. I'll be looking at the 4-hour chart to be in the green on the T3 moving averages. And that, on a big picture, says, hey, you know what? Markets don't just roll down in one swoop. You know, we got bounce action. We got counter trends upside on bigger picture. Just like we saw, market action was all downside here. And then what happened? We got some updates. So do I want to not be in those trades just because my bigger picture on a daily and weekly are all downside? I'll look up to these 100-tick and the 4-hour chart on a T3 moving average to see what color we're in. Color is just an indicator for me that the moving averages have crossed over. That's it. Now, if everything here is in the red, then my intraday picture is red on the setup. I'm more likely and higher probability to get a nice runner. And we'll see that here in a second here as we get to the NQ. So, market outlook for the Russell. Hey, I can't tell you where we're going next week. All I can tell you right now is the bias is to the downside. And so if the setup is intraday downside, I have a higher probability of a trade. Doesn't mean I won't take to the opposite as the buy signal and the crossover to the upside. But again, I would prefer my setups to be in sync with the bigger picture. All right, long-term YM, we can see the crossover already happening here on the 100-tick downside. It's the 4-hour chart on a T3 moving average. It's still holding upside, but on a 4-hour chart here, downside, downside, monthly downside, weekly downside. Out of 8 charts here, let's count them up. Sorry, 7. We got 6 out of 7 in the red. That's pretty much a bias enough to me in the red. As we can see, price action still holding to the downside under the 50, the 8-period moving average, and the 200. As we're still holding up here at a former Fibonacci extension, key number 16,000. But if we go back to your market profile and your volume profile, what did we say? We have some former lines down below. That's right, around 14,000, which would then be around one of the first Fibonacci extension levels here. Which means we also break down on a monthly. So when do we eventually get that? Sometime in the future. So if you line that up as we migrate down to 14,000, and we have an intraday picture that's red and a bigger picture that's red, the higher probability of the trade is to the downside. All right, let's take a look at the NQ. NQ on a 100-tick range chart downside. T3 moving average on a 4-hour chart migrating downside. 4-hour chart downside. daily chart downside, monthly chart just starting to cross, and a weekly chart downside and unable to break above the 250 and holding below the 8-period moving average. All right, so just like the other charts we just saw, red, 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 red. That's 4 right now, 4 out of the 7. We're still, I consider this red, so that's 5 out of the 7. And as the T3 moving averages start to migrate lower, that would continue to increase. So still the bias pretty much to the downside. Not as strong as the YM or TF, but still showing to the bias to the downside. Now, how do I use my volume profile, market profile? So I know my big picture is downside. That's right. Now, we said that market profile is continuing to migrate downside, closing out former open daily gaps. Also looking at volume profile and the NQ, that's right, we continue to migrate lower, closing out those open points of control. What lines am I looking for every day? So as I open up my trading on Friday, all right, I know that the bias on Friday is slightly to the downside. Not all charts yet. All right, and I see open points of control downside, not only on market profile. All right, not only on market profile, I have open daily gaps down here, 41.94, even though it closed the previous day, and 42.28, but I have lines of point of control from Thursday right here, the blue line. Just line it up right there. Open point of control from, that's right, open point of control from Thursday's action, 42.0725. All right, look at the volume profile from Thursday's price action. I have an open profile, open point of control down here, 42.0225. So 2 lines, that's right. Market action opens upside, but we got all these lines downside, and I got a big picture NQ pretty much moving to the downside. Bigger picture downside, downside, downside. 100 tick is now downside, even though early market action was upside. That's right, we were green in the beginning, so looking for the intraday to the upside was starting to look better, but eventually we turned. So once market action turned downside, this went red. T3 moving average started to go red up here. The T3 moving average set to a 5 period. So I got red and red, quasi-red here, not yet confirmed. So we'll call that a half. 1, 2, 3, 4, 5 and a half out of 7 charts. And we got a T3 moving average here and starting to move in a red. That's right, just look a little bit closer here. You got a T3 moving average slope has turned red. So call that 6, take that half, and you got 6 out of 7 red charts here. You got a market profile that's moving downwards. You got a volume profile with targets down below. And then what you do is you go to your intraday pick, and here on a 10-tick Flex Renko chart, I get an entry. An entry of sell signal crossover indicating that's right. The T3 moving averages have crossed over. The 5 is below the 34, and the 51.44 is set to a 1-minute chart in the red. Higher bias to the downside. Now the next question is, how do you manage this trade? Well, that's the whole game. 10% strategy, 90% trade management. As you can see, price action just kept you in the trend all the way down. That's what we do. Now, why was this even why was this setup so keen? Why was this such a significant hold? Well, you go to a bigger time frame, go to a 20-tick range chart, and you see that the setup had already occurred here, already about 30 minutes prior. And again, if you're trading off a 20-tick range chart, bigger stop, but sell signal crossover, sell signal crossover, sell signal crossover. These are all trend setups based on the strategy of T3 moving averages, 5 below 34, 50 below 144. They're all in the red. So this is a 20-tick set up at 135. All right, let's say you're not trading off the 20-tick. All right, you come down to the smaller time frame. You said 135. That's already back here. All right, but we know that back here the setup wasn't there because the S and the X were not together on the setup. Yeah, let's see if we can get this to move. There we go. There's our crossover prior to the setup. So no entry here. It's this setup right here on the sell signal crossover that took place at 211. And so 211, and now that in sync with the bigger time frame, the 20-tick, keeps you in the trend that much longer. And what's supporting this longer trend move? That's right.
you go back to the long-term picture on the NQ, I'm pretty much in the red. 6 out of 7 charts. Remember, we took half and half from each of these because the T3 slope is downside. And then you go to your volume profile and market profile, and you know you have downside targets. What downside targets? Well, open gaps from the previous day, or volume profile, knowing you have an open point of control down here, all the way down here at 4203.75, or even perhaps down here at 4177.75. And that is how the intraday pick works in conjunction with the higher time frame. All right, let's wrap it up with the ES here. Big picture here. ES downside on the T3, 5-period moving average. So we'll take a half on that and a half on this. Gives us 1, 2 downside, 3 downside, 4 downside, 5 downside, 6. 6 out of 7. As you can see, the ES is just rejecting each Fibonacci. We have a couple multiple Fibonacci retracements here on different big poles. Rejecting here 61.8, rejecting the 50, now rejecting the 38% as we migrate down to the 23 fib retracement. And so big picture for the ES continues to drive downside. When will this market shift? Well, it will shift when it wants to shift. What will first give me the sign that we're in an uptrend will be the 2 charts at the upper left-hand corner, the 100 tick and the 4-hour chart on a T3 moving average. If I'm green and I'm green here, I'll start to look for the green setups on my intraday charts. But I also want to know that I'm starting to migrate higher on the daily charts and the 4-hour charts, not being rejected and finding that price action is continuing downwards. But I also know that on my volume profile, I still have targets below. So the higher probability is that I continue to migrate lower. Now, can the market absolutely rally for the next 3 weeks, 2 months? Sure it can. And I will see a shift, that's right, I will see a shift in the T3 moving averages, the 100 tick, the 4-hour, and eventually break the 51.44 up here, migrate to green. Daily will break above the 144, and eventually the daily and the monthly will catch up. And so that's how we put the whole big picture together. Traders, looking out for this week's price economic news. We have a pretty heavy number of economic data come out, but what really stands out are obviously, as I said from the beginning, Fed speakers speaking. We have Janet Yellen on Wednesday. That probably will move the market in some way. PMI and jobless claims all on Thursday, and then wrapping up the week with 5 Fed speakers. But again, Janet Yellen speaking on Wednesday could absolutely always move the market. That concludes today's insights or recap into the state of indices and where I see things possibly headed if it continues, and how to be prepared for the counter direction. Feel free to stop by at tradingfibs.com, as you can see here, my website, or any of my social media outlets to obtain more information. Again, you can follow my trading rules here on my website with some sample templates for Sierra charts, NinjaTrader, Thinkorswim. Again, plenty of resources on the trading room e-manual, and then every week you could see me post the Indices Outlook recap, including perhaps any live trading room days that you want to join in, or any insights that I have to any other of the long-term charts. My trading mantra of one simple strategy: any market, any chart, any time frame will keep you disciplined. You can find me every day on Twitter at tradingfibs, and as always, I leave the crystal ball to the experts. I only trade what's in front of me and on my charts. Have yourselves a blue zone day, and good night, and good trading.